This is the Asia Trade. I'm Paul Allen in Sydney.
And I'm Haidi Stroud-Watts. The top stories this hour. Yen traders brace for more intervention after coordinated operations in Japan and the US triggered a rebound in the currency. Trump calls the actions a signal of friendship.
Trump also says new Iran negotiations will begin on Monday afternoon after scrapping a planned attack. Oil slumps and Asian stocks set to open lower.
And China's AI race heats up as DeepSeek launches its V4 Flash model aimed at cutting computing costs.
Right, let's start off with a look at the oil price, 84.46 for a barrel of Brent at the moment. This after, as we just mentioned, President Trump holding off on new strikes on Iran, says new negotiations are going to start Monday afternoon. We'll get you some more detail on that in a moment. We also had OPEC Plus agreeing to lift output quotas by 188,000 barrels a day. That's going to happen in September, and that will complete an unwind of the 2023 production cut. So a bit of downward pressure on crude today. Here in Australia, setting up for a weaker open off to the tune of about 1%. We had some interesting data out over the weekend. The slide in house prices continues in Australia, down 0.9% in July. Sydney now down 5.9% since the start of the year, due to a combination of tax changes, high rates, cost of living pressures as well. We've got a Reserve Bank of Australia meeting coming up next week too. Let's take a look at how we're setting up for Korea and Japan as well. Yen, a big feature today. We'll talk about that in a moment. 157.20 now. Traders are on intervention watch again, and we are expecting confirmation that the US and Japan are working in tandem to a degree never seen before to shore up that currency. Of course, Bank of Japan not doing much to help things, sitting on its hands again at Friday's policy meeting. Looking ahead to Korea, KOSPI futures off 5%. This is after an 18% rally on Friday, and there's evidence that retail traders in Korea getting a little bit tired of all of this volatility. We're seeing something of a backlash on social media right now.
Those surely are our two top thematics, right? But Paul, as you mentioned, we'll be looking very closely at that yen situation. We do have some statements coming both from the Japan side and the US side. The Japan Finance Ministry issued a statement there saying that the MOF purchased yen in coordination with the United States, that they will not hesitate to conduct further joint intervention. They will not hesitate to counter excessive volatility and the disorderly moves in the yen. The action was to counter the excessive volatility that we've seen in the yen. From the US side, we're hearing from Treasury Secretary Scott Bessent saying the coordinated FX move countered disorderly yen movement. Again, that lack of hesitation there. They strongly support Japan's decisive market, and Treasury remains in close communications with Japan's Ministry of Finance as well as the Bank of Japan. So Scott Bessent there strongly supporting Japan's market and monetary steps, and will be encouraging the FEMA repo facility to be upsized. The Ministry of Finance continuing to say in this statement that they plan to utilise that repo facility in the future, and just that sort of underscoring of zero hesitation to conduct further joint yen intervention. Let's bring in Bloomberg's MLive strategist Mark Cranfield joining us now for more. So if there was any uncertainty about commitment, certainly this jointly timed joint statements from the US and from the Ministry of Finance really wants to reiterate that there is no hesitancy to do more, right? For weeks, we've been talking about the need for shock and awe from Japan. Is this what we're getting now?
This is certainly the start of it. They still need to do a bit more. So traders are well aware of this so-called three-day rule that the International Monetary Fund has, in terms of if you start intervening, you need to do it 3 times in a row, then you need to take a break. Otherwise, there could be changes to the way your currency is viewed within the IMF status. So today would be day 3. And people will be fully expecting that there'll be more buying of the yen, especially now that the United States is involved. That really changes the dynamics, as you were saying. It's been a very, very long time since the US and Japan were working together to try and strengthen the Japanese yen. So that's a new dynamic. Traders are also going to be watching very, very carefully. When there was intervention earlier this year, the 155 line held for dollar yen. It did not go below that line. That's very significant. We're getting closer to it. We're only about 200 pips away from that now. If that can be pushed through 155, that will change the thinking a lot for people who've been buying dips in dollar yen, thinking that the carry trade will go on indefinitely. That would change the narrative substantially if they can push dollar yen below 155. What we're also seeing is that bets on a potential October interest rate hike by the Bank of Japan are rising. It's not yet a done deal, but they probably need to shift that towards September. If they can get more Japanese authorities speaking about the chance for an early interest rate hike from the Bank of Japan, they're still behind the curve and rates are still relatively low compared to the rest of the world. But people are not yet expecting a September rate hike. If they can get that priced into the market, again, very positive for the Japanese currency. So the initial steps have been very good. The yen has moved quite a bit more than it has in previous rounds of intervention, but there is more to be done, and traders will be expecting today to see even more action to support the currency.
Mark, you talk about the need or possibility of an early rate hike from the Bank of Japan. Early probably would have been 4 days ago on Friday. Why is the Bank of Japan continuing to move so slowly? And until we do see some real movement on rates, is intervention just, how effective is it going to be?
Well, clearly the Bank of Japan is being influenced by the Prime Minister, Sane Takaichi. When she came into power, it was well known that she wanted interest rates to stay low for as long as possible, and that the view seemed to be that if the Bank of Japan raised interest rates every 6 months, that would be fine. And that's way too slow in terms of where the inflation rate is in Japan. And the Bank of Japan, just on Friday, even they raised some of their forecasts for inflation going into next year. So clearly, at the moment, the Bank of Japan is not stepping up. But the intervention of the US Treasury changes things significantly. You can see the language from Scott Bessent there. He's putting pressure directly on the Japanese monetary authorities. He wants to see them act as well. So it's not just an internal thing. Sane Takaichi may start to be softening now when she sees the US pressure coming. So now that's why we're starting to see the pricing a little bit more aggressive for when the Bank of Japan might move. It's not a done deal by any means, and they're still technically behind the curve when you think that the neutral rate should be at least 2 and they're only down at 1. So there's a lot of work to be done, but things are changing. If they fail, if the Japanese authorities and the US fail this week, dollar yen will go back to being a carry trade, and we could see even higher levels than we've seen earlier this year. But this is a very big moment. It's a pivotal moment for yen traders, and they know what is coming. And by the end of this week, we could be in a new dynamic where the yen is no longer seen as an easy win if you short the currency.
All right, Bloomberg and Live strategist Mark Cranfield there. Still to come, we're set to get a whole lot of CPI data from Asia this week and a rate decision from India as well. Oxford Economics' Louise is going to join us next to discuss Asia's shifting monetary policy debate. This is Bloomberg.
Well, President Trump says a new round of negotiations with Tehran is set to begin on Monday. Says a deal to reopen the Strait of Hormuz may be close. He had called off a planned attack on Iran, citing pleas from US allies in the Middle East, including Saudi Arabia.
What we're doing is we're talking to them in the form of a negotiation. It begins tomorrow afternoon, and we'll see if it's true. I'd love to do that, save a lot of lives, save a lot of unnecessary power, to be honest with you. It would take many, many years to ever build it back. If it could, I don't think it would be even buildable back. So we had an attack that would be the biggest attack since World War II.
Well, let's bring up Bloomberg senior editor Wendy Benjamin. So I suppose, Wendy, after days of tit-for-tat escalation in these military operations, what's really changed here for the pause?
That's an excellent question, Heidi. And the answer is we're just sort of following, this step-by-step, watching the bouncing ball here from the White House. There was this long pause in the strikes, and then, some more attacks. And then Trump said that, Friday or Saturday said that, he was going to hit them really hard and that, he was done with this. And then apparently the Saudi crown prince called and some other allies called and said, why don't you hold off? There's talks going on. Give us a couple of days. And that is apparently what the president agreed to. He said that separately, that talks, as you saw in that soundbite, that talks were starting tomorrow afternoon. But we're not sure with whom, at what level, what the topics are. We know that Iran and Oman, the two countries that are on either side of the Strait of Hormuz, we know that they're talking about administering the strait, about managing shipping through the strait. But no one has, they've also said, that this has nothing to do with whether the strait will be open or closed, that that's up to the U.S. And then Trump said just a little while ago that the talks were also about their nuclear program, which we haven't heard from anyone else. So we're really not sure what is going on with these talks, except we know that as long as talks are going on, it looks like the strikes will be held back, and that may be a good thing certainly for our allies in the region.
And I do wonder if it is these Gulf allies that have been putting pressure, right? We heard obviously Saudi Arabia, the Crown Prince, voicing his concerns. How much of this newfound restraint is because of that pressure, domestic pressure? Obviously, we've talked a lot about midterms coming up and the economy, because it's hard to kind of decipher how different this next potential ceasefire deal will be from the one that was previously negotiated and broken.
You're absolutely right. And I think the answer, Haidi, is all of the above. He is under tremendous political pressure. We're seeing polls even from conservative media that show that he is at the lowest approval rating for any U.S. president since Richard Nixon, who resigned in 1974 this week. Resigned in disgrace, to avoid a criminal prosecution. And so Trump is about at that level of popularity right now, even in conservative polls. Republicans are not looking like they're going to win a majority of seats in the House for the midterms, which is bad. The Senate is in play. And also, our allies in the region are really nervous about this expanding into a truly regional war. We've seen Egypt be struck. We've seen Saudi Arabia and the Houthis attacking each other. And we've seen Kuwait and Jordan and Oman and a lot of our U.S. allies in the region being hit by these attacks that are really targeted at American assets in the region, but are hitting them as well. So I think there's a lot of pressure for Trump to get out of this war. And so we'll see if he's willing to do it.
All right, Bloomberg senior editor Wendy Benjaminson there. Let's take a look at the week ahead now. SpaceX set to report its first earnings since its record-breaking IPO. Investors will be looking for updates on Starlink growth and how the company's funding its Starship ambitions. The RBI expected to keep rates unchanged on Wednesday, with policymakers set to assess the impact of higher oil prices and weak monsoon rains. China's trade data is going to land on Friday, with exports likely to stay strong on AI hardware demand, although growth is seen moderating from June. And the week rounds out with the US jobs report, where early estimates point to a pickup from June's 57,000 payroll gain. Right, let's get to Louise Luna, head of Asia Economics at Oxford Economics. And Louise, I want to start with the news that we just had earlier this hour, jointly from Japan and the United States, talking about intervention in the yen, some real shock and awe language there about putting a floor under the currency. Do you see this working?
Well, hi, good morning. It's a lot of things happening at the same time for Japan, right? I think a lot of the weakness around the currency has got to do with structural underlying fundamentals. In particular, at its current stage, the fiscal poise from the government. So I think so long as that stays unchanged, and so long as the Fed remains unmoved in its interest rate, then we should continue to see some of these currency weakness coming from Japan. So, the intervention may work temporarily, but to the extent that markets continue to think that the Bank of Japan is behind the curve, I think that weakness will prevail.
Yeah, the Bank of Japan moving at utterly glacial speed on tightening and showing no real urge to pick up the pace either. Is the pressure starting to build? When do you think we might see tightening?
Well, our base case is still that the Bank of Japan would hike rates in December, which feels like an awfully long way away. But I think, to the extent that we have, for instance, higher oil prices, aggravating the terms of trade shock along with a weaker currency, to the extent that we have that, I think markets may start to think that the economy has a real risk of falling into stagflation. And so, the bets against a faster BOJ rate hikes will go up. The concern here is that, faster rate hikes may support the yen temporarily, but it will be quite negative for the economy that really hasn't been very strong domestically and organically. So, the economy remains quite structurally vulnerable to the kind of terms of trade shock that could feed through quite quickly.
December feels like a long way away for the BOJ, particularly at a time when there's increased volatility in Fed expectations, right? Are you in the camp, insofar as obviously there'll be a massive impact on emerging markets and Asian economies and for the Japanese yen, as we've been talking about? Which camp are you in when it comes to the Fed? Because Fed Chair Walsh has kind of been keeping markets and economists in the dark as to how he plans to travel this road of fighting inflation.
Yeah, I think the concern around the Fed is no longer, whether it would increase rates, which is always the case for emerging markets, or whether or not it would actually stay put. The concern here is that there's just not much visibility, right? And I think the lack of transparency is not going to cause currencies to be weaker in the region. It's just going to cause a lot more volatility and therefore a lot more corrections post-fact. And I think that is, something that central banks can't really grapple with at the same time where they had to still deal with, inflationary risks domestically. So I think that opaqueness is going to drive more volatility, but also possibly more policy errors coming out of Asia.
We now have another sort of pause when it comes to potential US-Iran talks. We see the oil market certainly reacting. But how do you view the pass-through when it comes to the recent revival and the gains that we have seen in oil prices?
Yeah, I think the pass-through, even before, when we were at the ceasefire point, which was, sometime in June, it did feel like, oil prices might have bottomed out and inflation expectations could have been arrested. But obviously, since then, there's a lot of volatility in the oil prices. And I think for Asian economies, the pass-through hasn't really been complete, right? We do have a lot of the headline CPI being muted because of some of these government interventions that were in place that helps subsidize and cap the headline prices. But underlying inflation expectations have actually been increasing. And a lot of the economies where we see more complete pass-through, where there hasn't been the influence of subsidies, prices have actually started trending up and hasn't really stopped that uptrend. So in the coming months, and especially in the CPI data this week, we are expecting that inflation will continue to stay quite elevated. And that reflects not the fact that the headline Brent prices have come down or gone up. It reflects the fact that refined fuel, which is what matters more for Asian economies, have continued to stay quite elevated. And I think that will keep central banks in the region on a more hawkish path than we previously anticipated.
Louise, really great to have you with us. Louise Liu, who's the head of Asia Economics at Oxford Economics, coming to us from Singapore. And more ahead here on the Asia Trade. This is Bloomberg.
An important measure in the bond market, which is break-even inflation. So sort of traders' expectation of inflation is at or below where it was at least after 10 years when he became chairman. But certainly the reaction during the press conference was probably not one that was welcome.
Former Fed Vice Chair Richard Clarendon there as scrutiny grows over the Kevin Walsh regime policy messaging. Well, bond investors are warning of the risk of a deeper Treasury rout. That's after Fed Chair Ghosh kept investors in the dark about how officials will respond to the evolving economy. That uncertainty has certainly widened the gap when it comes to what we see between 2- and 10-year Treasury yields. Markets reassessing the outlook for inflation and interest rates. Bloomberg opinion columnist Bill Dudley and former New York Fed President says Ghosh's approach to Fed policy is very flawed.
Well, it's weird when you're not explaining why three people are dissenting, yet the committee is deciding on no change in policy. There really was virtually no information about how the Federal Reserve is thinking about monetary policy, how the Federal Reserve is likely to react to incoming information in terms of how they adjust monetary policy. The silence of Ghosh was really quite deafening, and the financial markets, basically said thumbs down. I mean, the fact that the 30-year yield went up, the 10-year yield went up, and 2-year yields dropped really was a sign that that there was a loss of credibility from that press conference.
Bill, I want to highlight a distinction because I think it's important, and it's in the body of your op-ed, and I want to say it for you. You're not against reducing forward guidance. This is important. I think that the complaints about the people doing the complaining often are around the idea that somehow we still want our hands being held, that we want to hold on to the post-GFC communication architecture. And Bill, I don't think that's what your criticism is about.
No, I mean, I wrote a group of 30 paper that we published in April, and one of the recommendations was to get rid of forward guidance. The only time you really need forward guidance is when you're at the zero lower bound for interest rates and you're trying to provide additional monetary policy stimulus. But the rest of the time, it really just sort of inhibits the Fed and probably makes the Fed a little bit slower to react to incoming information. But that doesn't mean you don't want to know what the Fed's monetary policy reaction function is. And I think that's the real problem. Ghosh in his comments is conflating the two, and they're very, very different. If I don't understand how the Federal Reserve is going to react to incoming information, I can't price financial markets correctly. And it's also creating a lot of uncertainty about what policy is going to be in the future. The market response on Wednesday was really Fed credibility has lessened. And I think this is a really own goal on Kevin Ghosh's part. I think one of the problems here, I think, is he's overpromised and underdelivered. He talked about, sea change at the Fed, radical regime change. But then the markets are actually getting very, very little in terms of guidance on how to think about the new Fed.
Bill, we were discussing about whether maybe some of this was by design. There is going to be more volatility. There has been more volatility both at the front end and the long end in response to every economic data point and comment coming from anyone on the Federal Reserve as a result of an absence of some sort of reaction function articulated by the FOMC chair. Do you think that this could be by design to help reduce inflation without hiking rates?
I don't think this is a really great strategy for a couple of reasons. Number one, it's a very inefficient way of tightening financial conditions. Basically, you're driving up risk premium in markets. That's a deadweight loss to the economy. Number two, how well can you actually control the market process to generate the impulse that you want to slow the economy down sufficiently? And lastly, it's a credibility issue. I mean, if to the extent that the markets reacted the way they did on Wednesday, that's telling you that people are more worried about the Fed's resolve to do the job. That means inflation expectations are less well anchored than they were prior to the press conference. That in itself makes the Fed's job harder.
That's former New York Fed President and Bloomberg opinion columnist Bill Dudley there. Here's some of the top global headlines we're following. The impact of extreme heat is being felt across Europe. Water levels in the Danube have fallen to a record low, forcing Hungary's sole nuclear power plant to shut down. New Prime Minister Peter Magyar says one of the 2 remaining reactors still operating at the Pax plant was shut down early Sunday, with the final one powering down later in the day. Meanwhile, in Greece, firefighters have been battling multiple wildfires across the country as strong winds fanned dozens of blazes, destroying homes and forcing evacuations, including in coastal settlements northwest of Athens. South Korea, meanwhile, has issued heatwave warnings after the city of Yangsan hit 42.5 degrees Celsius. That is the highest temperature recorded since 1904. Yonhap says senior officials are being deployed to affected regions to assess local responses and provide additional support where needed. This is Bloomberg.
Of course, we've got quite a lot to contend with at the start of this week, right? But front and centre is really what's going on with the yen. It was very coordinated action and very coordinated communication of that action that we got just a few minutes ago, right? Both the US and Japan, the Ministry of Finance, Treasury Secretary Besson come out and saying that, yes, there was this coordinated action, that they're fully supportive, but most importantly, that there is no hesitancy to keep doing further actions, further intervention, if you will, because they've clearly agreed that the yen weakness has gone on too long, that it's gone on too far, and that they've called it disorderly, they've called it volatile. These are the things that they want to avoid. So there is that sense that even as we see, just last Wednesday, we were sitting at around almost that 164 level, right? We could see that further extension of dollar yen lower this week. They've really ganged up to hammer home that message that the declines have gone too far. And to that point, it's a pretty painful position to be in if you, in fact, have been caught out as a yen bear, right? Because this is likely to deter most investors, I would think, from taking on even more bearish positions. If you take a look at the chart on the right of your screen, that combined net short position between speculators and asset managers, biggest in 2 years as of last week, right before they went through and destroyed that yen bear dream.
Yeah, there was a sense that something was coming, the timing, incredible. First thing, Monday morning in the Asia Pacific, and that coordinated release from Scott Bessent and Satsuki Katayama as well. So, yeah, very interesting to watch that yen movement today. Also watching the oil price as well, which has come back down. I believe it's below 85 a barrel at the moment. So some progress there on the oil front. President Trump says, well, they're holding off on new strikes on Iran. He said earlier, his words, that there was about to be the biggest attack since World War II. Not happening now. New negotiations to begin on Monday afternoon. Tehran and other Middle East nations say they're working on a deal to reopen the Strait of Hormuz as well. But we've been here before, haven't we? Also, though, we're watching the tech trade. I mean, the stocks fell 21% in July, at its worst month since October 2008. The KOSPI has been all over the park in July. It was up 18% on Friday. Futures suggest we're going to be down today. Nikkei futures off by 0.25% as well. So the tech trade very much in focus today as well. And we also saw some AI releases coming out of China on the weekend. This includes an updated model from DeepSeek, the V4 Flash. Let's get to our China correspondent, Min Lo. So, Min, tell us, what do we know about the features of this new model?
Yeah, so this model came slightly behind schedule, according to Caixin. The target was in mid-July, and it features more artificial agentic AI services or capabilities. And this comes as the company has also just closed a $50 billion funding round, where it's really focusing on expanding its commercial product development with, again, a focus on agentic AI services. The thing to note about this latest product is that DeepSeek has cut its prices for the API tokens, both input and output tokens, to as much as 50%. And this comes as DeepSeek is already one of the cheapest AI models out there in China, and that helped to propel the Flash model, or at least the preview version of it, to top this Open Router, a global API aggregator, for 7 weeks in a row. So this is something that is further escalating the price war in China right now.
We've also had Minimax and ByteDance releasing new video generation models. Can you tell us about this?
Yes, the two companies releasing their own new video generation models just within hours of each other. And of course, ByteDance's C-Dance is already very popular in China, and it's now boasting more enhanced editing capabilities. Minimax coming out with its H3 model as well, and is now topping a leaderboard when it comes to its editing capabilities. It's also ranking in the top 3 when it comes to video or text to video, as well as image to video. And again, that Minimax model, according to some analysts, is what stands out because it's still about half the price of many of its peers, particularly when it comes to high-res videos like 2K videos. And again, Bloomberg Intelligence analyst Robert Lee is saying that given the level of price competition here, he is not expecting the sector to be profitable in the next 3 years until at least pricing becomes a bit more rational.
All right, Bloomberg's China correspondent Min Lo, thank you. Right, we got markets in Korea opening at the top of the hour. That's never fails to entertain, does it? We saw a big gain for Korean stocks on Friday, up 18%, but it's been such a wild month. We've seen 4 trading halts, multiple sidecar activations, and it looks like we're going to be off again today. We've got KOSPI futures off 5%. Those 2 big names, Samsung Electronics and SK Hynix, both lower. SK Hynix, it's down 44% from the peak, although if you got in January, you're still up 152% year to date. Now, retail investors feeling a little bit burned by all this volatility, reeling from the KOSPI's rout. They sold a record amount of shares on Friday, and anger is growing despite officials' efforts to stabilize the stock market. Bloomberg's Asia stocks reporter Yu-Kyung Lee joins us now with more from Seoul. So, Yu-Kyung, why are Korean retail investors blaming the government for the latest Korean stock market turmoil?
Yeah, that's a good question. I mean, there are signs of frustration and despair everywhere on the social media. And when I spoke to some of the retail investors in Seoul, there were a lot of criticism and anger growing on the government. I think there are 2 big reasons. One reason is because this current administration has been encouraging money move away from the real estate market to the capital market. And there has been top officials who have been themselves investing in the local stock market in order to encourage that move. And a lot of the retail investors in South Korea, they for the first time joined the South Korean stock market, investing in the stocks for the first time this year. And we've seen more than $50 billion worth of retail money went into the South Korean stock market in May and June, which was actually the later stage of the rally. And those retail investors who have reputation for embracing volatility and risk, even for them, the July rout, the market rout in July, 20% drop from drop, which was the worst since the global financial crisis, was really huge, and they were definitely rattled after this July market turmoil. And much of that blame has been going to the government. And the second reason is because the government has introduced in late May the single stock leverage ETF product, which has been blamed for amplifying the volatility in the stock market. Now, South Korea has a big reliance on the chip stocks, and that may be exacerbating the market turmoil that we have seen lately. But these leverage ETF has been also blamed for magnifying such volatility in the market, and there are growing criticism that the government's introduction was in a rush and was not properly reviewed. And we've seen some top officials having apologized and coming up with some measures in order to curb the volatility that has been spurred by these leverage ETFs.
Well, the government obviously awake to the problem. What needs to happen to lure those Korean retail investors back into the stock market?
Yeah, for now, it looks like a lot of South Korean retail investors are so burned, and they're vowing not to buy the stock market ever again because they feel like they've been betrayed by the promises of the gains that have been shown in this market and by the government. I think it's going to take a lot more for these retail investors to come back. I mean, if there is going to be a quick turnaround and a quick rebound in the market for some sustained days, the sentiment may also make a turnaround, but retail investor sentiment remains really fragile, and it's more likely that they will sell into every rebound. That's what I'm hearing, and hence, because rather than the big purchase of the stocks that we've seen from the retail investors during the earlier this year, we're going to see retail selling in almost every rebound going forward. That's what the professional investor has been telling me, and that's what the retail investor has been telling me. So I think it's going to take a lot more than just a couple of days of gains for these retail investors to make a comeback in South Korean stock market.
Bloomberg's Asia stocks reporter Yu-Kyung Lee there as we head into another week, watching what happens with sentiment in Korea. And as local retailers sell, foreign buyers are piling back into the KOSPI. If you take a look at this chart, the question really is, how will the extremely cheap pricing of these Chinese LMMs factor in, and could that drive sentiment even lower this week? Let's bring Bloomberg's Anthony Stevens for more. And of course, the closing of the gap, right, when it comes to China AI tech has been a big component of this story, and particularly at a time where we're seeing so much investment still being driven into this space. This latest DeepSeek development, how does that potentially change the game, particularly as it doesn't just pertain, I understand, to token usage, but the efficiency of this model?
Absolutely. And China is coming out with these kind of efficiency improvements pretty much every weekend. It feels like every weekend I need to read about a new Chinese model. And what's interesting about this one is that it's a flash model from DeepSeek, which means that it's much smaller in the number of parameters. And yet it manages to score quite well on performance. So as a result, now you have this interesting possibility of people being able to locally host AI models, incorporate data centers and the like, because they're so small and they're so efficient. Now that raises long-term questions around hyperscaler demand for compute and memory. And we saw some of that playing out in the US session as well. You had Micron quite weak, the DRAM US ETF quite weak, and Korean futures extremely weak, down 5%, retracing a decent chunk of that huge move on Friday. Now that's playing out a little bit early. This adds extra pressure to the pressure on the AI trade that's coming from higher US long yen yields at the same time. So you have micro and macro pressure on the AI, GPU and memory trade. Now in the longer run, investors will have to really do some homework on what the tech picture looks like from Chinese LLMs. Do Chinese LLMs and their cheapness drive new AI use cases, or do they cannibalize existing AI use cases in coding and the like? And how much money is really out there for so many LLMs to compete at the same time? And how much compute and memory is needed for that kind of LLM processing? So these are all very open tech questions, and it looks like the AI trade is getting very dispersed into the second half. For example, on Friday, we saw NVIDIA trade quite well despite memory being weak.
What about Japan? Because it's not great timing for Kioxia to miss both the outlook and also the profit.
Absolutely, right. They miss into a time of heightened kind of uncertainty around the memory trade, especially the part of the memory trade where they dominate, the kind of more commoditized NAND and DRAM side of the thing markets, where CXMT is starting to be a much bigger player and now has a much bigger IPO. In that vein, CXMT has now entered the DRAM US ETF as well. So US investors have a little bit more room to play that theme. It'll be very interesting again to see how well CXMT trades in China, to see whether it can continue to outperform its peers everywhere else. Also in Japan, you have the concept of the yen driving tech dispersion. So traditional kind of tech exporters like Nintendo and Sony have been struggling with the yen strength and the kind of chip shortage. On the other side, the AI trade has been completely different. Now, do they also struggle with the yen weakness going forward, given the Chinese disruption? That is an open question. So it'll be very interesting to look under the hood rather than the headline indexes today to see just how well Japan tech is holding up amidst all of these cross currents.
Bloomberg Markets reporter Anthony Stevens. And of course, so much focus on Japan with the first US-Japan joint yen intervention in about 15 years. And we have continued to hear now some remarks speaking to the press from Satsuki Katayama, the finance minister in Japan, again reiterating that Japan is watching these developments in the FX space closely. They're maintaining close contact with the US, and the communications with Washington has gone very well. Talking about the FEMA facility, they say that they can start using that soon. The US side has said, according to Finance Minister Katayama, that Japan's yen should be valued higher, but she's since then refrained from commenting on what Scott Bessent thinks about the BOJ, but that both the US and Japan judge the need for the FX intervention. So to address excessive volatility and again, reiterating the confidence that they won't hesitate to conduct further joint intervention if it is needed. So all of this suggesting that we could see further downside when it comes to dollar yen this week. One of the sort of sensitive topics, of course, was how yen weakness potentially becomes an issue for US treasuries as well, given the moves that we've seen in treasury yield. So no doubt that was also a topic of conversation. But we'll be watching for more comments as these markets begin trading and sort of reacting to what we've seen so far. Quite a bit of pain if you've been a yen bearer over the last few days, certainly given that just mid last week we were looking at around that 163, almost 164 level for dollar yen. More ahead here in the Asia trade. This is Bloomberg.
Japan's earnings season is in full swing with automakers in focus this week. The sector has been pressured by rising costs and the Middle East conflict, though a weaker yen should provide some relief. Well, that was until a few minutes ago. Bloomberg's Wang joins us now for a preview. Adrian, what are you watching?
Hi, Paul. So let's start with the automakers because we do have the likes of Toyota, Honda and Nissan all reporting results later this week. Now, investors and analysts, they're going to be watching out for any currency-related upgrades to guidance. With Nissan, revenue is expected to climb about 13% in the latest quarter, and that's really helped with the weaker yen, which is helping to temporarily offset those rising costs and the lackluster sales in China. Nissan did tout stronger progress in its overall restructuring in the latest quarter. So it'll be interesting to see whether they've actually kept that momentum going. Now, automakers in Japan, they're facing quite a wide range of challenges, including US tariffs and even the rising costs of R&D needed just to keep up with the intense competition. Let's switch over to Nintendo because the focus really will be on what guidance they'll provide, because especially with their switch to console. According to Bloomberg sources, Nintendo has asked their suppliers and their partners to assemble 20 million units of their switch to console in the year through March. And so that's actually about 20% more than the public sales outlook that they had provided. Finally, let's turn over to SoftBank, where the focus really will be on the expanding bets in OpenAI, and Bloomberg Intelligence saying that they are expected to post a 6th consecutive quarter of results. Haidi.
Bloomberg's Adrian Ron there setting it up for us. And Goldman Sachs says a recent sell-off when it comes to the AI-related stocks in Japan has created a buying opportunity. Also saying that with strong earnings, investor appetite for chip stocks can be revived. Joining us now is Bruce Kirk, Chief Japan Equity Strategist at Goldman Sachs. Bruce, great to have you with us. I guess we'd better start off on Kioxia then. These numbers coming at not such a great time when it comes to sentiment in this space. What do you make of it, given that it was less about probably the profit miss and more about the uncertainty and miss on guidance?
Yeah, look, well, first of all, thank you for having me on the show. Look, I think the sell-off that we saw last week, particularly in the AI space, it was really driven, as these sharp sell-offs tend to be, driven by a combination of extended positioning, high amounts of leverage, and very tight risk limits and stop losses. And those factors, I think, were very much at work last week. I think it is quite instructive to look at what was happening in the Japanese equities market 2 years ago, where, if you remember, we had this very sharp strengthening of the yen. Dollar yen moved from 162 down to like 143, and then topics fell 24% peak to trough, right? And I think we're starting to see something similar taking place here, in that the positioning around a lot of these AI names is very extended, and when we look at foreign positioning in the Japanese market, both on the hedge fund side and also on the broader long-only side, it's a lot more extended than it was in the summer of 24. Margin positions are also about 30% higher than they were in the summer of 24. So to get back to the Kioxia situation, I think we've seen the correction in Kioxia come down sort of 50-60% from the peak. There's still a lot of extended positioning in that, and I think if we now see dollar yen with both the US and the Japanese government intervention, if there's a possibility that could actually start to continue to move lower, then I think it puts a lot of pressure on the equities market as people look at the biases within their portfolio and still see that financials exporters bias.
That's interesting. I'm glad you mentioned the yen, because obviously that's front and center today, and I suspect for the rest of the week to see how much more movement we could see. There's quite a lot of determination in this joint intervention for sure, but has that been so much of an impact when it comes to exporters as we have seen sort of traditionally?
Well, I think in the phase that we saw from the peak in June to the end of last week, so last Thursday, I think that was more that was more a positioning unwind than a focus on the currency. The macro backdrop, now that we have relative to the summer of 2024, is a lot more supportive of the dollar being stronger for longer. Right, so if you think about the trajectory now, the Fed trajectory is starting to look a little bit more hawkish. We've got more concerns about Japanese fiscal sustainability. So, far less yen supportive than we were in the summer of 2024. Now, if we look at net yen short positioning, that is definitely at its most extended level since July 24. So net shorts by non-commercial speculative investors is at that sort of, it's not quite at the July peak, but it's not that far off. So, I think when you combine the FX positioning and you think about, what could happen from here with this coordinated effort by the Japanese and the US authorities, then I think as you were saying in your intro, if you are short yen, then you've got to be thinking about, well, if this is a coordinated effort, if it's the first time in a number of years that we've seen that, then it might be longer lasting and it might be more efficient. It might be more effective.
Bruce, just quickly before we leave, have you seen much impact when it comes to the volatility and rotation out of Korea?
Yeah, I think if we look at the correlation between Nikkei and KOSPI, it's definitely increased over the last 2-3 months. So, we're maybe not moving as violently as KOSPI, but peak to trough, Nikkei in particular. Nikkei is now, peak to trough, Nikkei's gone down 15%. Now, it's obviously gone down a lot more in KOSPI, but if you look within Nikkei, if you look at the AI focused companies, then they are moving very much in lockstep with what we're seeing in Korea.
Bruce, really great to have you with us. Bruce Kirk, who's the Chief Japan Equity Strategist at Goldman Sachs. More ahead here on the Asia Trade. This is Bloomberg.
We are counting down to the open in Australia, Japan and South Korea as well. Here's how we're shaping up. Nikkei futures turning positive in the last little while, only just though. We have, of course, had that big news around the yen. Coordinated action from the US and Japan to strengthen the currency. Right now, 157.64. Korea looks like it's setting up for another wild ride. Futures currently off 2.2%. This is after a huge 18% rally on Friday. We have those market opens in Sydney, Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, and yen intervention is, of course, we're on watch for further declines when it comes to dollar yen, and we've really seen this coordinated effort. This is the first joint US-Japan yen intervention exercise in about 15 years. We've seen both the communications being very coordinated, but also that continued rhetoric. We just heard from the finance minister again speaking in Japan, really underscoring this idea that there's no hesitancy to do further interventions if needed. They don't want to see the further volatility. They don't want to see what they call disorderly moves in the yen. We've seen Scott Bessent coming out in support of that as well.
Well, we shall see, won't we? 157.59. It's certainly helped put a floor into things for now. We're also keeping an eye on the oil price. President Trump says he's holding off on new strikes on Iran. New negotiations are going to get underway on Monday, although we shall see, won't we? Because we've kind of been in this position before, Heidi.
Yep, that's right. Take a look at how we're going to see this play out, I should say, when it comes to Japanese Japanese stocks, because there have been a lot of voices, Goldman Sachs among them, talking about the opportunities that still lie within that space when it comes to Japan stocks, particularly at a time where we continue to see the uncertainty and volatility and rotation out of Korea, right? The Nikkei 225 coming online, bit of softness there, just about 1% lower. The top VIX also a little bit softer there. We are going to see that AI and chip-related space probably coming under further pressure, given that we have seen the Kioxia, both the guidance and the profit missing there. So coming at a pretty miserable time when it comes to these existential questions that investors already have over the enormous amount of spending in the AI space and whether they're going to see that payoff finally. Dollar yen is obviously what we've been watching. 157.69 is what we're at the moment, as Paul mentioned. It's funny to think less than a week ago, mid last week, we were still at that sort of almost 164 level for the yen before the intervention came through. That not yet element, right, that Paul you just alluded to, is really whether we'll see the sustained ability to hold these losses for the dollar, particularly as that trajectory between the Bank of Japan and the Fed continues to split. The Bank of Japan still taking its time. The Fed, a lot of investors still feeling like they're in the dark over what Fed Chair Walsh is going to do, but potentially setting up for that tightening there. We're seeing Treasury yields dropping across the curve, as well as the move when it comes to the Japanese two-year yield rising to 1.54%, first time since 1995. Switch out the board to take a look at what we're watching for Korea. The KOSPI index falling by over 4%. Just at the start of trading, but we've pulled back a little bit, 3.1% lower there as we continue to really see those declines for stocks. Didn't get a great lead when it comes to, of course, the Wall Street session as well in terms of those chip stocks. But for one, there is some optimism being conveyed by some analysts. Morgan Stanley, for one, upgrading South Korean stocks to overweight, saying with all of that sell-off that we've seen, it's now a better entry point into the AI trade, that super cycle theme for industrials after what it calls a leverage washout. So the KOSPI, of course, has fallen, about 30% from a peak in June there. Regulators have come in. It was just such a frenetic week last week, Paul, and we are still seeing some downside, though, when it comes to the big heavyweight. Samsung, Hynix down by over 5% apiece at the open.
Yeah, never a dull moment in South Korea. Let's take a look at what's happening with the oil price. I did mention that President Trump holding off on those new strikes. Apparently, new negotiations will begin. We're seeing a bit of pressure there. Brent crude now just holding on above $84 a barrel. Interesting moves for US Treasuries as well. The 10-year yield coming back just a little bit. It was above 4.7. It was the highest it's been since the start of 2025. Now just below that level. Yields on the 2-year also a little bit softer as well. Bond investors have been a little bit, let's say, unnerved about the lack of communications about how Fed officials might be responding to pressures in the economy, particularly around inflation. Kevin Walsh, though, understood to be considering reducing the number of Fed policy meetings, so that doesn't exactly address that concern. Let's get to Julia Wang now, North Asia CIO at Nomura International Wealth Management. And Julia, we do have to start with all that news on the yen today. Intervention coordinated from the US and Japan. Is it going to work? Where's the floor for the currency?
Yeah, sure. Good morning. Thanks for having me on the show. So, we think that the focus for yen this week obviously is on the intervention, given what's been flagged by the officials. And that's going to determine, I guess, the near-term direction for the currency. If there's a forceful intervention, we could see probably the yen retesting 155 or levels around that. Is that really a game changer for the currency? Look, we think that the currency is really driven by the inflation in Japan is driven by oil prices and the concern over fiscal policy. And that really translates into the rates differential between the U.S. And Japan. That macro backdrop is not getting more favorable for the yen. It's actually going against the yen. So I think against this big backdrop from a macro perspective, the FX policy strategy maybe is more about slowing the pace of yen depreciation rather than really seeking to turn it around from a directional perspective. So yes, we think that for the week, probably we can see some more choppiness and probably more temporary yen strength. But we do think that this does not change actually direction for dollar yen and probably could still continue to go higher once the intervention is behind us.
Yeah, what's the role of the Bank of Japan in all of this? Or they don't even appear to be playing a role at the moment, more doing a sloth impersonation if Friday's meeting was anything to go by. Do you see the Bank of Japan feeling motivated now to tighten sooner rather than later?
Well, I think there is some motivation because, the lack of action from the Bank of Japan, the slower than expected move, has been one of the reasons. And you can see some upgrades of inflation forecasts, some more internal debate at the BOJ. But is this enough to really propel them to take a more aggressive stance overall on the pace of rate hike? We actually do doubt it. So I think there's a case for maybe moving forward the December rate hike now to October. So we do see that as a more live meeting, but we still see it as roughly like a once every 6 months type of policy rate move, and it's really hard given what's going on in the global economy, from Middle East war to what's going on with now the tech trade. And all of that disruption that's playing out in the equity market, we actually see a very tall hurdle for the Bank of Japan to really go much faster than our forecast for 2 rate hikes every year. So if they move forward the December meeting to October, we actually still see the next rate hike probably somewhere in mid-2027.
So I guess the question is, if they don't feel like they can move any faster, that fade from this intervention could come pretty quickly without fundamental restructuring of that differential between the US and Japan.
Yeah, so I think the differential, unfortunately, is moving away from Japan. And if the U.S. front end have priced 2 hikes or maybe even more than that by the Fed in the next year or so, in Bank of Japan, we don't think that they really have what it takes to move faster. So if the forward markets are right, then we'll probably have seen a narrowest of rate differential between Japan and U.S. in this cycle. And going forward, that rate differential is going to actually widen. So that speaks to maybe more strength for the dollar, at least particularly from the front end rates perspective, and less so for Japan. So I think that interest rate differential really does determine a lot of where dollar yen is. But of course, the carry trade and what the sentiment is for equity market also matters from a carry trade perspective. That is going through a little bit of volatility at the moment. But our thesis is that we think that there's enough growth both in the real economy as well as powered by AI that probably will still keep equity market in a bull market range for the next year. So both of that factor speaks to, I think, probably a still continue grind up higher for dollar yen, maybe at a more gradual pace now because the Bank of Japan and Treasury now are showing their hands and the strong preference for a more gradual pace of depreciation.
Julie, let's talk a little bit about that tech story, because obviously it's been pretty chaotic, particularly for Korean markets, and that's sort of still bleeding through. If you look at this as a leverage washout, if you will, and we kind of resume gains, or do you look at this as there's further to go for a kind of fundamental restructuring of how investors view the amount of investment that's going to AI and how much, they're going to say that this is worth?
Yeah, so I think that overall, just very quickly for the overall tech trade, I think there are 2 headwinds. One of the headwinds is long end yields going ever higher. It's not a problem for tech for now, but it will be for medium term if we continue to see a gradual grind up higher in long end rates in the U.S. The second headwind is the volatility that's because of the leverage, and it's something that we were warning about in our mid-year outlook. That sometimes the price is right, but the market structure through which we got there speaks to incredible volatility and fragility to come. So Korea is a very good example of that. I continue to see that being a headwind for this market. Now, particularly for memories, I do think that the fundamental has changed a little bit compared to where we liked to trade the most, which was early in the year. That is because even though the demand-supply imbalance is still there, we're heading to 2027 now, and that is when more of the capex will start to come through. And now you have China joining the supply landscape as well. So that speaks to maybe potentially the risk of a quicker adjustment. On the demand side, we do see more rationalization by hyperscalers in the U.S. from a demand side perspective as well. So demand-supply imbalance is still there, but we're counting down to the time when that starts to get more corrected. So I think that we are are probably more new, still positive, but less positive compared with early in the year. And the volatility from a leverage perspective doesn't help that. So our preferred way to play AI, which is still a fundamental theme for next 2 to 3 years, is actually look at what's been the message from the earnings season this time. And that is that some companies, not everyone, are able to monetize, and investors reward those who are able to monetize by allowing them to build up more leverage and borrow more. So we think that actually there are some that have shown their strength in the earnings season. There are some maybe they're punished a little bit more than we think they should be. So a lot of the focus probably will go back, I think, to some of the hyperscalers in the U.S. now, given that the earnings strength has been so impressive. And I think that's probably in the market where the risk-reward, the pocket of the market where the risk-reward is the best from the AI trade perspective.
In terms of the AI trade, what's your approach to the China side of that story? How's your allocation there? Because we've got the Shanghai Composite, the CSI 300, both softer year to date. This is a market relatively insulated from the Iran war or other such factors, and a nascent but pretty successful AI story as well. What's your allocation?
Yeah, so for China AI, I think there's 2-3 broad parts. The parts we like the most at the moment is actually still the hardware story that goes into the global supply chain, because we are positive about overall AI development. We see a lot of continued capex, even though not ever higher, so there's more rationality, but still overall capex strength is going higher. So we think that the part of China's hardware space that goes into the global supply chain could still benefit. The risk of export ban, et cetera, notwithstanding, that's still the part where we see the most visibility in terms of earning growth. China still also does have a lot of strength in terms of models, but we think that that's very hard to monetize because the competition is so intense. So watching closely for clue on innovation, but that's not very profitable at the moment. And then the last part is kind of China AI, China large cap tech. And they've rallied in July because of the rotation into underperformers. So they've gone up quite a bit, maybe still a little bit more to go, but we're heading to earnings as well for those guys. And the takeaway from earnings season message overall this time is that investors will scrutinize company by company your ability to really monetize the capex. So if you believe that certain companies can monetize, then their stock is due to buy, but they've actually rallied quite a bit. So I think from a risk-reward perspective, hardware and overall global supply chain within China is still we want to go. So that's the space we probably would look to be buying on dip or buy into weakness.
Julia, really great to have you with us. Julia Wang, who's a North Asia CIO at Nomura International Wealth Management. And we are hearing further rhetoric now from Tokyo. We're hearing from Japan's currency chief, Atsushi Nomura, speaking in Tokyo again, delivering that line, the key takeaway from what we've seen in this US-Japan joint yen intervention, the first in about 15 years, saying we intend to continue the FX response without any lapse, and they won't hesitate to conduct further joint investigation. We've heard now this same messaging strongly from Finance Minister Katayama. We've heard this from Treasury Secretary Scott Bessent from the US side as well. Clearly, there is a view from both sides that these yen declines have gone on too far, and they've really driven home collectively this messaging that the markets should not be making these one-way bets. The longer-term fundamentals, as we've been discussing, very, very difficult to turn around given just that difference, the differentials between what the BOJ is doing, moving very slowly, and what potentially the Fed will be doing much quicker, which is to tighten. But at this point, given that we have had this international cooperation, certainly some of those short-term bearish positions will be quite hard to maintain. Much more ahead here on the Asia Trade. This is Bloomberg.
With Japan. We're very strong, very, very strong financially. And they are, they have a weakening yen, and they wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
Mr. President,
they were not good.
What is the U.S. getting out of that arrangement?
Financial benefit. Financial benefit. And it's also good for the world economy.
President Trump there speaking after the US and Japan intervened to support the yen, the first such joint action that we've seen in about 15 years. So take a look at what we're watching when it comes to assets trading in Japan. Obviously, we still see kind of the aftermath or the continuation of the AI and chip-related sell-off, particularly in light of some unfavourable numbers from Kioxia. The Nikkei 225 seen downside, not quite as bad as what we're seeing with the continued sell-off in Korea. But the move in the 10-year yield, we've seen the move in the treasuries as well. Dollar yen is sitting at that 157.86 level. The question, of course, is how long these gains when it comes to the yen or the losses in the dollar can be sustained. We have heard from the FX chief as well, the currency chief speaking in Tokyo, again, really underscoring the messaging that's already been delivered by the finance minister, by Scott Bessent of the US Treasury there as well. Nomura saying they'll respond to FX in coordination with monetary policy. So I want to get a little bit more on that. Bloomberg's economy and government reporter Yoshiaki Nohara joins us now from Tokyo. She's referenced the BOJ having that shared understanding. She talks about the joint kind of need to work with monetary policy. What does that mean? Because obviously interest rates is a missing piece here.
Right. So that's already the key point, given that the intervention took place before the Bank of Japan conducted its latest decision. But then, as you mentioned, that it's difficult to know or guess exactly what does that mean when they say that in coordination with the monetary policy, because monetary policy is very simple, whether you raise high interest rates or not, but there's a huge differential left between the US and Japan. So I'm not exactly sure, but at least the Japan side is implying that it's not just currencies, but it's all efforts, from other parts of the government, including monetary policy.
That's the thing, right? What are some of the, I guess, drivers or prohibitors from the BOJ moving faster than potentially December?
Right. Right after the BOJ made its latest decision last week, I spoke to, several market participants, and they mentioned that they definitely see the risk that the potential that the BOJ may hike earlier than expected. Some said even September is not out of the guess at this point. But, when you think about it, speaking of the yen's weakness, is it only about monetary policy? Probably not. It's driven also by the concerns about Japan's fiscal situation. That's also persisting because the Prime Minister has yet to identify how to fund the sales tax cut on food.
All right, that was Bloomberg's economy and government reporter Yoshiaki Nohara in Tokyo. Thank you. Now, subscribers can also turn to the terminal for more on the joint US-Japan yen action. T-Live Go is your function for the latest updates, plus analysis from our expert editors. Now, President Trump says new Iran talks will start on Monday after he called off a planned attack on Iran, and that's partly due to pleas from allies in the Middle East, including Saudi Arabia.
What we're doing is we're talking to them in the form of a negotiation. It begins tomorrow afternoon, and we'll see if it's true. I'd love to do that. Save a lot of lives, save a lot of unnecessary power. To be honest with you, it'll take many, many years to ever build it back. If it could, I don't think it would be even buildable back. So we had an attack that would be the biggest attack since World War II.
For more, let's get to Bloomberg editor Michael Heath. Mike, to two World War II references in the space of 2 minutes there from President Trump. But, I mean, in terms of the Iran situation, we've been here before, encouraging signs. So where are we at?
Yeah, Paul, what seems to be moving at the moment, outside of what you mentioned with some of the regional countries wanting the US to pull back, is that Oman and Iran are talking about some sort of agreement, or in the final stages of an agreement, on how to manage the Strait of Hormuz, which would remove a really significant impediment. The only caveat to that is that Iran also said this has nothing to do with whether it will be opened or closed, kind of thing. And obviously, getting that administration of it and then getting it open is a key point, because we can't even get to the major issues of the peace agreement while that's closed. So, we're still sort of waiting to see what comes from that. But By the same token, too, I mean, the US can keep bombing, but Iran's made it, unless it's out of nowhere the regime collapses or it has some sort of economic crisis, it's made it fairly clear that it can weather these storms kind of things. So these constant bombing raids really don't seem to advance things much other than putting a lot of pressure on their allies when Iran retaliates.
I suppose the question is in terms of what this potential next ceasefire deal could be, its longevity, what has changed from the last deal that clearly fell apart or wasn't abided by?
Well, I think, Haidi, that everyone sort of recognises that you can't fudge what's going to go on with the Strait of Hormuz. I mean, right. Once that impediment's moved, I think things could progress from there. The outlines of the deal they had did show a way forward on that front, but Iran is determined that this is its trump card and it is not giving it up. So whether the US backs down, whether they find some way, there is some payment of some sort that goes on there. If that is removed, then we can really probably progress to some extent. But if they try to fudge it again, then it's just going to be the same sort of situation, you'd imagine.
It's pretty clear what the US is trying to extract here, but what's Iran trying to get out of a potential deal?
Well, the maximum possible, Paul, and I think they feel, they really feel like they've weathered the best that the US and Israel earlier could throw at them. They've realised the power that they had over the energy flows, and also their ability to destabilise the countries around the region. So it's sort of in a way reinforced just how strong Iran is. For the longer term, there's nothing particularly good for them unless they can get a deal and unlock all these funds that were in the MOU. But we have to get there first.
Bloomberg editor Michael Heath there. More ahead here on the Asia Trade. This is Bloomberg. Take a look at how we're watching trading in Japan. Of course, headlines are all dominated by the US-Japan joint intervention on the yen. All of this is going to play through potentially for some of these Japanese exporters, but at the moment we're watching that AI chip-related space very closely. Kioxia Holdings is actually trading higher by 3.5% despite some disappointment, that slide in the ADRs after both the miss on the profit and the guidance. But there is some upside in terms of what some strategists are seeing as strong demand from AI centres, enterprises that could lift average selling prices, according to Bloomberg Intelligence. We're also watching Murata. This is a maker of high-end AI components as well. They actually raised its profit outlook, but did give a warning that AI spending will level off at some point, eventually losing steam due to increasing competition as well as rising debt. So those were two really key factors that investors have been worried about. So we're seeing a little bit of downside for Murata amidst broader selling in the Nikkei.
Need to talk about oil as well, now below $84 a barrel for Brent. We were just talking about how President Trump is now holding off on those new strikes on Iran. So new negotiations due to begin on Monday. We'll see if they bear fruit. But there's other dynamics at play as well. OPEC Plus agreeing to lift output quotas by 188,000 barrels a day starting September, and that will complete the unwind of 2023 production cuts. It's got some reaction happening in oil stocks across the region. Woodside, Santos, both lower by about 2%. Plus, Inpex and S-Oil in South Korea weaker as well. We have more ahead on the Asia Trade. This is Bloomberg. Let's take a look at our markets in Asia. Are tracking 30 minutes into the new trading week. We are off a little bit across the major markets. The Nikkei down by 1.8%. We need to talk about the yen, of course. Strengthening further now, has a 156 handle, 156.55. This is after that joint action announced between the US and Japan to support the currency in terms of intervention. BOJ still absent from the field, though. Take a look at the KOSPI, though. Yep. Playing to form. Another wild day there. We're off by 5.3%. This is after an 18% increase to close out Friday. But we've had the trading halt for the KOSPI announced 4 times back in July. Signs that retail investors are starting to lose their patience with some of this volatility as well. We've got here in Australia, meanwhile, a little bit more of a normal session. We're off by 0.25%, Heidi.
Yeah, and of course we're continuing to watch the global economic gauges as well, like particularly when it comes to the impact that higher oil prices have had on broader inflation and some of the pressures across Asian markets as well. We're seeing that S&P Global Japan July manufacturing PMI coming in at 54.5 there, so a little bit of a pullback from the previous reading for South Korea. We actually see some strengthening. Indonesia managing to claw out of contraction territory, now above that 50 level that demarcates some sense of growth, and we are seeing largely unchanged when it comes to Taiwan. Vietnam seeing a bit of a boost to just under 53, so a mixed bag, but broadly we're looking at some more positive forward-facing indicators from these PMI gauges around Asia. And Paul, so much of this growth, of course, for a number of these markets, including the likes of Taiwan, right, as well as Korea, is really down to the growth and investment that we're seeing in the AI space.
Yeah, and we saw some more AI releases coming out of China over the weekend as well. It includes an updated model from DeepSeek, the V4 Flash. Let's get to our China correspondent, Min Min Lo. So, Min Min, tell us about the new features of this model. What can it do?
Yeah, so it scores better on intelligence. It's coding tasks. When it comes to coding tasks as well as operating system tasks, it surpasses Zhipu, but still trailing behind Kimi K3, which is for now still seen as the best performing model here in China so far. But the key thing to note is that it's also DeepSeek has cut the prices of the API input and output tokens by as much as 50%, and already DeepSeek is the lowest priced AI models out there in China. So with the price cuts, it is further escalating this price war even further, and could potentially see increased market adoption, particularly because the Flash is a smaller size model as well. So this is something that continues to pose a challenge to some of the frontier models in the US and continuing to spark this sell-off that we're seeing in the KOSPI as well.
Well, we've got Minimax and ByteDance also out with a new generation video model. Can you tell us more about that?
Yes, these are video generation models. ByteDance's C-Dance has been very well known in China, and Minimax has also unveiled a new H3 model as well. Both are performing very well. The H3 has topped the leaderboard when it comes to video editing. It is in the top 3 when it comes to text to video as well as image to video capabilities. And C-Dance as well is boasting enhanced editing capabilities with the upgraded model. And again, when it comes to pricing, Minimax stands out because it is still half the price of some of its competitors, particularly when it comes to its ability to create high-res 2K videos. So that puts it heads and shoulders above the rest of the competitors in this space.
The Bloomberg China correspondent, and we continue to watch China. It's been a week now since CXMT started trading in Shanghai. Analysts' opinions about it becoming more polarized than on any other stock in Asia. The most bullish of them thinks the chipmaker will be worth $1.1 trillion over the next 12 months. On the other end of the spectrum, the most bearish believes the valuation will be around $160 billion. Our Asia stocks reporter Gina Yu joins us now. So why are the views so bifurcated when it comes to the valuation for CXMT?
Yeah, it's kind of surprising the gap is so wide. In just a week after CXMT was listed, the analyst opinion is already one of the widest in Asia. I think the key divergence in their opinions is actually how fast CXMT, with the additional funding from the IPOs, they can actually catch up with the foreign peers. There were two aspects here. So one thing is for the lower end chips, made for the consumer electronics like personal computers or smartphones, like how they are going to boost the applies and potentially cause a drop in the lower end memory chip prices. That is a little bit uncertain. I think the other key debate is how fast China can catch up in the higher end chip making, which is the HBM space that SK Hynix, Samsung, and Micro currently is focusing on. One thing is actually CXMT and some other Chinese Chinese memory chip makers, they can actually find some alternative pathways using the DUV breakthroughs to kind of like make breakthrough in HBM space in the future. And in that case, CXM's valuation would be able to skyrocket from the current level. So that's why we're seeing kind of like a polarization in terms of analyst view here.
What's going to be the impact when it comes to the trifecta of giants, right? Hynix, Samsung, Micron?
Yeah, I think it's kind of interesting because when we talk to investors, some think actually the market has kind of underestimated the potential impact on the global memory trial. I think if you look at the revenue share for SK Hynix and Samsung, each of them have about 15 to 20% of revenue share from China. And that market share is kind of uncertain if CXMT boosts supplies and even make breakthrough in the HBM space. So this is kind of, I think this is kind of like an element that's some investors sees a potential risk for the current AI chip rally.
All right, Asia Stocks reporter Jenny Yu there. Thank you. Let's check in on the yen. It's had an interesting morning. Now just holding on above that 156 level. This is after Japan confirmed its first joint intervention with the United States in currency markets in 15 years. And we had joint releases earlier this morning from Japan's Finance Minister Satsuki Katayama and U.S. Treasury Secretary Scott Bessent. Driving the yen further stronger, we also heard from Atsushi Nomura, Japan's top currency official, reinforcing the point we will respond to foreign exchange in coordination with monetary policy. We will continue FX response without any lapse, and I have a shared understanding with the Bank of Japan as well. The Bank of Japan being that central bank that didn't do anything on Friday. Yen right now 156.34. We have more ahead on the Asia trade. This is Bloomberg.
Well, experts are blaming Anthropic and OpenAI for sloppy safeguards after their models broke into outside organizations, breaches they warn represent national security threats. For more, let's bring Ajoy Ghosh, who's the founder and chief information security officer at the Cyber Alchemist. He's with us now. He's also a member of Australia's New South Wales Government AI Review Committee. Ajoy, really great to have you with us. So, by accident or by design? Because there's also, of course, a narrative that this is a way that these companies are testing the abilities of these models.
So I think the important thing to remember is that this is an evolution, not a revolution. So for many years, we've had many examples where software has automatically scanned and made a decision to propagate when the human handbrakes have been taken off. So in 1988, we had the Morris worm. In 99, we had the Melissa virus. And in 2004, we had the Sasa worm. There have been many examples since we fast forward to 2026 and OpenAI and Anthropic.
If you take a look at the level of concern that is even just within the realm of AI research and staffing, we've had 1,000 staff members from some of these top AI companies signing a petition pleading essentially for the tech progress to be slowed down. That's pretty rare, isn't it? Does that give an insight into how much concern there is over the threat, even internally?
So yes, there's certainly a lot of concern. However, ever since I can remember, and I've been in cybersecurity now for about 30 years, it's always been the case where the defender has had to contemplate an adversary that was smarter, that was more agile than the tech teams defending the corporation, and in many cases was motivated and better resourced than the tech team in the corporation, especially where we're talking about nation states, organised crime, or corporate criminals. That's still the case today.
Well, these models escaped from a sandbox due to human error, effectively. Can you say, or can we say, how safe are sandboxes, and how do we safeguard them better?
Yeah. So I think the important thing to think about is that the software, and ultimately AI agents are just software, should have been supervised. Anthropic themselves have said that the model should not have been connected to the internet, but in 3 of those 140,000 cases, and remember, this is only 3 of 140,000 cases where another organisation could have been attacked, the system was connected to the internet. In other words, it should have been constrained, but it wasn't properly supervised. So I think moving forward, it's going to be interesting to see whether or not the platforms are going to be held to account when their software does find a way to connect to somebody else's system, to get that unauthorized access. And what we don't know yet is whether or not it was able to access personal or sensitive information, and whether or not it was able to disrupt a business critical system for those 3 organisations.
Is there a greater role for regulators here, more external oversight? How might that be structured?
It's going to take some time to think about, for the regulators to think about how they're going to respond. But I think whilst all of that plays out, for corporations, I think it's important for them to remember that the best thing that they can do is to continue to do all of the things that they have been told in the last few years. They need to understand exactly where their data is, and where particularly the critical and valuable data. They need to have good cyber hygiene practices in place. They need to continually scan for weaknesses. They need to have appropriate detection measure, and they need to practice how they respond when an incident is detected. As far as regulation and government is concerned, I think there are 2 things we need to do. We need to understand how and when we pursue those companies that let their software do something bad, but we also need to think how we can encourage organisations to better protect their systems.
I think you bring up a good point in terms of the punitive measures, right? Because there's a lot of people saying, look, if a regular cybersecurity company did this and had these lapses, there would be penalties, there would be regulatory concerns, there would be financial penalties. These are companies that didn't even discover these hacks. One was back in April, yes. Right? And certainly neither were discovered natively. How worrisome is that? And should these companies be treated as such, be held to sort of higher penalties? Because at the moment it feels a little bit like they're able to kind of conduct these experiments in the name of kind of AI progress, which everyone's so enamoured of.
Yeah. So we don't yet know who those 3 organisations are, and whether or not those organisations held lots of personal information, nor how critical their systems and services were. So I think actually it's both. We need to focus on making sure that corporations, including the AI platforms, don't allow both their people and their systems to disrupt others. And we need to make sure that those people who hold our personal data and run our critical systems make sure that they can't be disrupted.
Are you confident that there's adequate, or there will be adequate, cybersecurity defences to these systems, or are we sort of past the point where the technology has outrun that ability?
So again, for as long as I can remember, we've always dealt, as defenders, always had to deal with adversaries who were smarter than us and generally more capable than us, but we've always found a way to protect our organisations properly, and that's going to continue.
Just finally, the name Anthropic, obviously relates to things human. Do you find it darkly poetic at all that these models lie, cheat, steal, take dangerous shortcuts in pursuit of a goal? How do we prevent that?
As do humans. If you look back across the history of hackers and hacking, almost without exception, there have been liars and cheats. They've been very smart, and they've known how to put together a whole bunch of disparate information to craft that particular attack that worked. All that's happening now is that smart machines are mimicking what used to be that human behaviour.
All right. Ajoy Ghosh, founder and chief information security officer at the Cyber Alchemist. Thanks so much for joining us today. Right, we need to talk about the yen because it's continuing to strengthen. 155.71 now, so we're up now as much as 1% versus the dollar, and this is after this coordinated action that we've been reporting from today from both the Ministry of Finance in Japan and the US Treasury Secretary as well, having very much the desired effect. And we also heard from Japan's top currency chief earlier saying this is going to be unrelenting. So the yen strengthening, 155.86 at the moment. We have more ahead on the Asia trade. This is Bloomberg. Bloomberg Intelligence says China's AI industry remains locked in a race to the bottom. That's as price competition threatens to keep much of the sector unprofitable for years to come. Senior analyst Robert Lee joins us now from Hong Kong. So Robert, you compare China's AI sector in your report to the solar industry. What are the parallels here?
Yes, that's right, Paul. I think the parallels are pretty stark, to be honest, in that there's a very high level of commoditization within the AI software sector. And I must stress I'm referring to the developers of models and AI-related software, not the chip companies, which are clearly making a lot of money, as are their peers in the US. So the sector is overpopulated. It's flooded with supply. At the last count, there were 988 large language models officially approved by the regulator in China. That's an enormous amount of models. And if you look at them, whilst there are some leading ones that are making the headlines like Moonshot AI, the Kimi model that made the headlines a couple of weeks ago, plus DeepSeek, the level of overall differentiation within the sector is relatively limited. Therefore, the only option companies have is to really compete on price. And the level of price competition in the sector at the moment is intense. For example, ByteDance entered the sector very aggressively earlier in the year, reducing its API pricing to a 99% discount to the sector. So I think, again, the comparisons and parallels with solar are pretty stark.
So how about the role of open source here? Do you feel this is a positive for China's AI sector?
Okay, I would say that open source, which is ultimately driven by government policy, is designed to proliferate AI within the economy as a whole, to drive the uptake of AI. And that is clearly having some benefit, so the policy is working. But it is also impacting the ability of firms to monetize, as I've already mentioned. Because ultimately, you're making your model weights available to developers to tinker with. Most of the open source models in China are available free to access. So monetization remains the key question, not just within a China context, but globally, as I'm sure most of the viewers are aware. And that remains incredibly challenging within a China context.
So which firms are the best placed then to lead the sector?
I think it's a pretty boring answer to that question. It's the best capitalized companies, the one with the largest R&D resources and largest financial resources, because ultimately we'll need to see a consolidation in this sector and a shakeout. Again, with nearly 1,000 competing models, that is unsustainable in the long run. Therefore, it is the companies like Alibaba, Tencent, Huawei, and perhaps ByteDance as well that are best placed to win. I think the likes of Moonshot AI and DeepSeek, although they make headlines, they lack that balance sheet strength, they lack that diversity or diversification within their businesses. And I think you're likely to see those companies continue to come back to market to raise money. So I think it's the best capitalized ones. Scale will ultimately win out in this sector.
Bloomberg Intelligence senior analyst Robert Lee there as we continue to watch that closing of the gap between Chinese AI tech and the US. But that is obviously one of the themes that continues to play out when you see the steep downside that continues for another day for the KOSPI down by 4%. The Nikkei 225 faring somewhat better, I guess, if you want some perspective, still over 2% lower. The AI, the chip thematic is not so great there either, with the miss on profit and guidance for Kioxia. Dollar yen, though, is really the story of the day and will continue to be for the week, I suspect. We are seeing those accelerated advances when it comes to the yen now. The quickening of that into that May peak of 155 now into play as well. There is some questions being raised on our MLive blog by Garfield Reynolds saying that this surge, is it because we're seeing a very quick repositioning by traders to get out of this any kind of shorts before the next specs are taken, or is there in fact another round of intervention that's taking place? Certainly we've had a lot of reassurance and determination, I guess, is a messaging that we've heard from the Finance Ministry, from the currency chief, most recently from the US Treasury Secretary Scott Bessent as well, talking about the lack of hesitancy, that they will act with further intervention if they continue to see that disorderly decline in the yen, which obviously the two sides have deemed to be too much. This is the first joint yen intervention that we've seen between the US and Japan in about 15 years. Take a look at how we're playing out as we head into the start of trading across Greater China, and of course that chip-related, the AI semiconductor play will continue to be top of mind there. Hong Kong traded futures are seeing a little bit of upside at the moment. Taiwan looking like we'll see a bit of a struggle on the day as well, as A50 China futures down by 0.4%. So we are seeing broad downside when it comes to these markets, despite of course, some alleviation of risk on the geopolitical front as well, with President Trump saying that talks with Iran are set to begin on Monday. He's scrapped the latest plans for the attack, but front and center will be looking at how the yen trades throughout the course of this day. That's it for the Asia trade. The China show is next.